welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we're going to start off, as we have done for the last few months, talking about the S&P 500, which seems to be stuck with a magnet at just under the 2,400 level, and it's been amazingly steady.
Yeah, that's right. It is stuck just below 2,400, and you can see on the graph over here how it's been stuck there really for the last 3 weeks or so. And you can see very, very tight trading range over that period. I mean, we're talking 2380 to 2400 is the broad range there. So that's 20 points. That's less than 1% that we've seen over the last 3 weeks or so. But if you actually were to go down into the individual daily trading ranges, I mean, there are days on the S&P 500 where, like last night, for example, it spent the bulk of the day's trading range in a 3-point trading range. You know, so we're talking about 3, 4, maybe 5 points per day sometimes. It's really, really, really very dull at the moment in terms of trading. But it is bumping up against that 2,400 resistance level, and my sense is that it will eventually break that level. Whether it breaks it now and moves higher or pulls back a little bit first and then pushes higher, I don't really know. It's anybody's guess. But when you see a level being tested like this over and over and over and over, like it is here, invariably you do see a break through that level at some point.
I mean, last week we were talking about the VIX and how it's at a 20-odd-year low. I mean, is there a particular reason, do you think, that the S&P is, the VIX is low, the S&P is trading in a 5-point range on a daily basis? I mean, that there are kind of no exaggerated volumes either way.
Look, I mean, at the moment, I think there's just no particular catalysts to move the market in one way or the other. All the previous catalytic, if that's a word, catalysts that we might have been looking for have somewhat passed us now. We've had the French election. We've had all the various things in the past, the Brexits, the Trumps, etc. I mean, those are obviously quite a long way past now. But right now, as we sit here, there's no particular catalyst on the horizon that jumps out at me and says this could be a market-moving event. Sometimes that's the time when something does come out of left field and catch us all by surprise. But right now, there's really not very much out there that's creating much market movement. So it's just very, very quiet at the moment. And often we go into this time of the year where it's the Northern Hemisphere summer months. It's often quiet and a bit dull then anyway. But I mean, this is extreme dull trade that we're seeing here at the moment.
And it's not that much more interesting on the JSE either, if you look at the top 40, because it is grinding higher generally, but then, in increments. It's really not going fast anywhere fast.
No, exactly, it's not. And in fact, I mean, you can see the chart of the top 40 up here on the screen at the moment, and you can see that it has been moving higher, certainly since the beginning of March. But it does tend to mask what has been going on beneath the surface. And we're going to look at the top 5 shares on the JSE in a moment and talk about the contributions that they've made this year. It's really been very much driven by the contributions of Naspers, which is up 35% for the year to date, and Richemont, which is up about 20% for the year to date. Those two shares, by market capitalization and by their weighting in the index, are the two biggest shares on the JSE. Collectively, those two stocks make up 30% of the weight of the top 40 index. But if you look beneath that, the movements have really been nowhere. I mean, there's been a few shares up, a few shares down, a few are flat. There's nothing to really write home about. If it weren't for Richemont and Naspers, this market would have gone absolutely sideways for the year to date. But if we look at the top 40 graph that is up there at the moment, as you say, it has sort of been grinding gradually higher, aided a lot by Naspers in the last week or two particularly. But the move through 46,800 there back in late April was a bullish break, and it remains above that level. You can see quite clearly an upward sloping channel evident over there, and the market remains within that upward sloping channel. Right now, that little piece at the end there looks to me like it could be forming a small bull flag pattern, and typically those are bullish continuation patterns, and they will usually break out in the direction of the prevailing trend. So that would imply the likelihood is that we could see another push up in the top 40 here, and maybe we see the index going up to 48,000 or 48,500. But let's see. In the event that it does pull back, on the other hand, we've got this lateral support here, which is at 46,800. That's the level where it broke out in late April. And if we saw the market coming back down to that level, that's where I would expect to see some buying interest coming into play.
Yeah. Okay, well, let's talk about the market, because as you say, I mean, if two shares account for 30% of the top 40's weighting, it really is, I suppose, unless you're taking a firm conviction on either of those stocks, then you're kind of left adrift, aren't you?
You are kind of left adrift. So this is a weighting of the top 5 shares on the market by market weighting. And the reason I look at these 5 only is because collectively these 5 shares make up about 47% of the weight of the top 40 index. So, talking about half the contribution to the top 40 index comes from these 5 shares. And you can see how heavily skewed it is towards Naspers over here, running up at almost 21% weighting in the top 40 index, followed by Richemont, BHP Billiton, and the others down below. So the thinking here is that we're going to look at each of these 5 shares, and then if we can try and glean some sort of idea of what these 5 shares are likely to do, then possibly it gives us some sort of indication as to what we might expect from the top 40. I'll warn you up front, it's not going to give us much more insight than we have right now. But nevertheless, we'll have a look at the technical structure of each of these stocks, and just it's interesting if nothing else.
Okay, all right. Let's start off with Naspers, which you took a position in. I guess you might be somewhat disappointed that you cut out of it, and we did talk about that last week, because it has actually gone, well, fairly significantly past where you exited the position.
Yeah, I mean, in hindsight now, retrospectively, we probably could have made double what we did out of this trade if we had just held on for another 3 or 4 weeks. So it certainly, being patient would have yielded a better result here. But anyway, we did do well out of it. At the time, I would have never guessed that it was going to go up as much as it has done in a straight line, effectively. This is the daily graph of Naspers, and we're going to look at a weekly chart of it in a moment, just to zoom out and see what things look like. But on the daily chart, you can see that there was the sideways channel between January and March, and that was what we identified when it broke out earlier in the year. That's when we said we would buy, and I did say at that stage, a sideways consolidation of that length generally does result in a fairly powerful move to the upside, and that's exactly what we've seen over the last in fact, what's been nearly 2 months since that breakout occurred. As I said, Naspers is up about 35% for the year to date. It's a significant move for the share that makes up the biggest weighting of the market. But if we actually look now at the weekly chart of Naspers, that's this one over here, and you can see it goes back to 2015. What's evident is that there's this upward sloping channel, which is quite neat, and it's contained all the highs and lows over the last 2 years of trade. And you can see we're starting to get close towards the upper boundary of this channel over here. That upper boundary comes in at about 2,850 to 2,900 Rand per share. And at that point, one would think that it's probably hitting up against a lot of resistance, and it might begin to consolidate from there. So certainly it looks to me as if we are in the final stages of this big rally on Naspers before we see some fairly meaningful consolidation in the months ahead.
Okay, all right. So, and that's good. I guess everyone who benchmarks themselves against the JSE is going to have to bear that in mind.
Well, that's right. And I think the risk for a lot of fund managers out there, particularly those who benchmark themselves against the JSE All-Share Index or against the top 40 index, is that if you've been underweight Naspers, that's been a major, major problem in your performance, because it's the only share that's really given us a significant gain this year other than Richemont. And if you've been underweight that stock, it's really hurt your relative performance. And
I think a lot of people were probably underweight Richemont too, because certainly the results that they came out with recently weren't spectacular by any stretch of the imagination. There's a lot of, I guess, worries about changing appetites in the luxury goods markets, the people and the geographies to which they sell, and yet, I mean, I'm happy because I'm a shareholder, but there's been this phenomenal rally.
There has been a phenomenal rally, and certainly there was a lot of good news baked into the price before those numbers came out. And you can see since those numbers came out, there's actually been a big gap to the downside in the share price. And that's obviously reflecting the fact that those numbers, as you said, showed actually a slight decline in revenue for the year. Technically, if we look at it, you can see it has been trending higher since the start of the year. The break above 104 Rand was a bullish break, but now we've seen it pushing up. At that stage, as we were looking at it in early May, there was a lot of good news baked into the price in the expectation of these results, which came out a little bit lighter than the market was looking for. You can see the big gap to the downside there following those numbers. And to me now, that big gap down indicates that we're probably due for a little bit more weakness in the near term, and you could probably quite feasibly see this share price drifting back down towards 104, 105 Rand, where there's a fair amount of support there. I don't believe that this gap in the chart is going to be filled in the near term. I think it's probably going to stay open for a while still, and that to me, doesn't look as if this stock is going to give us a tremendous contribution to the upside for the index in the near term.
Yeah. And then what about, there's BHP Billiton and Anglo, I suppose, number 5 in the position, but BHP Billiton, the third largest stock in the top 40?
Yes, so BHP Billiton, in fact, all of these resources shares, when I look at them globally, they don't look fantastic. And I look at a lot of these shares in London. I look at Anglos and Billiton in London, as well as Glencore, as well as Rio Tinto, and a variety of others that are listed in London, and they don't look great. It really does look as if that resources rally that we saw last year has petered out, and there's a big sort of rounding top pattern on a lot of these shares, as you can see here on BHP Billiton. The stock broke below that upward trend in January of this year, or February actually. It fell. It gave a rally back to retest the underside of that previous rising trend. But that to me now looks as if it's actually, the momentum is weak, and I don't think we can expect great things from this stock in the near term. Your 50-day moving average is pointing to the downside, which implies weak medium-term momentum. So I don't think we're going to see this share rocketing higher anytime soon. To me, it looks like it's probably more choppy sideways action with maybe a little bit of a downside bias.
Yeah, I'm sure it's a similar picture on Anglo American, which we'll get to in a moment, but the British American Tobacco, do you think that's been a fairly good performer this year, and I guess to some extent helped by the rand?
Yes, it has been helped by a weakening rand of late, and this share price has done phenomenally well in London, I must say. So it's had the double whammy effect recently of strong performance in London as well as a weaker rand here in South Africa. So it has performed well, as you say. I think it's up about 18% for the year to date, so it's given a reasonable contribution to the top 40. But lately, what have we got? It's been moving high, but there's negative divergence evident on the stochastic over here. That is where your stochastic makes a lower high, yet your price makes a higher high, and it's basically indicative of declining upward momentum. We saw a big reversal candle last week on British American Tobacco, as well as that negative divergence. To me, that suggests that we're probably going to drift down here as well in the near term, I think.
And then just lastly, Anglo American for the top 5 stocks of the top 40? Yeah,
so here's Anglo American. Again, you can see this big rounding top type of structure that I spoke about on BHP Billiton as well. Similar setup on Anglo American. Some will say there's a head and shoulders pattern there, which is probably not far from the truth either. The break below 185 Rand here is not such a good news story. To me, the big support on Anglo American comes at 160 Rand, and I think quite feasibly that's where this share price is going before it finds any real buying interest.
Garth, I mean, just to sum up kind of these charts, the link between them all is that they're Rand hedge stocks, but they have very different factors affecting them. But do you think, were you to see either a very strong rand or a very weak rand, it would provide some sort of impetus to the top 40?
It would. I mean, a very weak rand obviously would help all of these shares to move up somewhat, just based on the conversion. A very strong rand or a slightly strengthening rand, I think, would weigh on these shares.
Yeah.
So and we don't know. I mean, is the rand going to strengthen or weaken? I suppose that talks to the whole political situation in the country. Do we get another downgrade from Moody's, etc., etc.? There's a variety of things that can influence the rand as we look ahead.
So very frustrating times as a trader.
It is frustrating times. I must say, I'm finding it very tough at the moment. I talk to a lot of people in the industry who are finding it equally tough. I think in all the years that I've been doing this Traders Corner show, actually, I think it's amongst the toughest times we've ever experienced right now. There's just no confidence in the market or in the country at the moment.
Yeah, and no clear sense of direction. So I suppose, you know, if things are all heading south, you could short the market, but that's not happening either.
Well, this is it. It's very, very tricky. And to me, sort of capital preservation is always your number one priority as a trader. And I'm kind of trying to remember that front of mind at the moment without being too aggressive.
Okay, well, let's look at the portfolio because it is pretty much unchanged from last week.
Yeah, look, there's no change actually from last week. You can see our local portfolio is up 4.7% for the year to date. Our offshore portfolio in pounds is still down 3.75% for the year to date. So you take those two together, we're more or less flat for the year to date. Nice thing is we've still got 100% of our capital intact. Obviously, I'd like to try and see that moving in the right direction as we approach the second half of the year.
Yeah, and very quickly, Garth, you've got courses still this month?
Yes, I've got a high probability trading course in Cape Town on the 27th of May, and then my colleague Andrew Todd is a whiz on the top 40, and he's got a top 40 trading course on the 3rd of June. So if anyone would like to register to attend these courses, please email me, garth@traderscorner.co.za, and I'll send you all the details.
We have to leave it there, unfortunately. Garth, thanks very much, as always, for joining us. Garth McKenzie is founder and editor of Traders Corner.